Imagine you have a full glass of water. Overnight, a tiny, invisible hole appears at the bottom. Slowly, steadily, the water level begins to drop. That slow leak is exactly what inflation does to your money. You work hard, save diligently, yet everything costs more. That familiar frustration? It's inflation quietly eating away at your hard-earned dollars, making you feel like you're always just running to stay put.
Your entire financial system, how you earn, save, and spend, is like a house. Inflation is a slow, constant wind, gently eroding its foundation and walls. Instead of just patching cracks, we need to build a stronger, more resilient structure, an anti-inflation shield around your money house. Here are 3 simple changes to build that shield, starting today. First, fortify your cash foundation. Many keep emergency savings in a regular bank account, which often pays very little interest, sometimes less than 0.1%.
If inflation is, say, 3% a year, your $10,000 in a regular account is losing about $300 in buying power. It is like leaving your money out in the wind. The easy fix: move your emergency fund and short-term savings into a high-yield savings account.
You will not get rich, but if that account pays 4% interest, your $10,000 now earns $400, making it less vulnerable to inflation's wind. This reinforces the ground around your money house. Second, build inflation-resistant walls. Future costs will be higher. That $5 coffee might be $6 in a few years. Your money needs to grow at a pace that beats this increase.
This is where strategic investing comes in. It does not have to be complicated. Consistently put money into broad market investments, like an S&P 500 index fund or a total stock market ETF. These funds hold small pieces of many companies, spreading risk. Historically, they have grown faster than inflation over the long term. This is not about quick riches. It is about making sure your money actively outpaces rising prices. These are your strong, flexible walls, built to stand against the wind and adapt.
Finally, strengthen your income roof. Your income is the primary source of new funds for your financial house, and it needs to grow. If inflation is 3% and your salary stays the same, you are effectively taking a pay cut. Ensure your skills remain valuable and in demand, or increase in value. This means learning a new skill, getting a certification, taking on a profitable side hustle, or actively negotiating for a raise. The stronger your income roof, the more protection it provides, and the more easily you can bring in new resources to maintain your financial house. A sturdy roof keeps the elements out and adds value, ensuring inflation cannot wear it down. Just a quick note, this is for educational purposes. I am not giving personal financial advice. Always do your own research or talk to a professional who knows your specific situation. The real shift isn't just about cutting back or finding cheaper groceries. It's realizing inflation is a permanent guest at your money table. The aha moment comes from systematically designing your financial house around it. You are not just reacting, you are building a blueprint that anticipates and resists its effects. This proactive defense gives you powerful control. Remember this, your financial blueprint isn't static. It's a living system that needs to adapt to protect your future purchasing power. Build your anti-inflation shield. I want you to think about which of these 3 steps you can start with this week. Share your first step in the comments below.